Hello, everyone, and welcome back to Psychedelic Insights. Today, I'm speaking with Dan, better known as Charting Man Dan from the Chart Guys. I was really excited to make this video with Dan, and when I told a close friend I was setting this video up with the Chart Guys, he said, "Which Chart Guys?" To which I replied, "The Chart Guys." This is what these guys specialize in, technical analysis, and they do a great job of it. I've learned a lot watching their videos, looking at the sector. Um, and they also have a very impressive following on both YouTube and X. I previously had been one of those people who was part of that group of investors who said TA is just astrology for men. But, over time, I've begun to realize that technical analysis, especially when combined with fundamental analysis, is very valuable. On the technical side, looking at things such as support levels, resistance levels, volume is a big one that I look at, and it could sometimes signal a reversal in the price action, stuff like that. There's a lot to it, and I'm very excited to have Dan on the channel. And without further ado, let's get it started. So, with that being said, we're gonna look over some of these names. We'll start with the big names like Compass and move on from there. Dan, thank you so much for coming on.
Yeah, Jake, thanks for having me. So that proves that you have an open mind, because most people, if they watch long enough, then they can say, okay, there's some value here. We're not using technical analysis to make predictions. I'm not saying CMPS is going to be $40 by June 2024. What we're doing is establishing most likely scenarios and positioning ourselves where we can mitigate our risk and keep risk small and look for potential reward. And the psychedelic space and the cannabis space certainly have my attention because I love hype and euphoria, and these sectors are so thinly traded that when we get a catalyst, we certainly know that there's going to be significant opportunity in these less liquid names.
And Dan, I have a quick question for you, actually. Do you, with your technical analysis, do you keep in mind potential dates of when trial results will be released, or maybe some news flow coming in on like maybe MDMA getting, let's say, FDA priority review, that type of stuff? Or is it mostly for now you're waiting for those headlines and then you maybe make a move?
Yeah, I'm mostly waiting. If I have a significant position, then I will pay attention a lot more. But it's mostly waiting for the charts. I'm looking for the volume. I'm looking for interest to pick up and longer term trend changes. And so, we have a few people as a part of our trading community that are much more in tune with this sector than I am. And so they lend a hand as far as giving us a heads up. But for the most part, it's waiting for I want to see the herd get interested. I want to see people that aren't following, because there's a small group of you guys that are paying attention, and you're in early and you're watching things. And then once it's the sexy enough headline to get to the Twitterverse and to Reddit,
Yeah.
that's when the fun begins.
And before we get started, I would like to say I do own positions in Compass, GH Research, and wow, I'm forgetting the name here, ATAI. So viewers keep that in mind. But yeah, I'm actually more. I go into these names with a long-term mindset, but at the same time, like you said, if there's a lot of euphoria, the market gets a little bit of ahead of itself. There are times where I look to maybe trim down shares, and even for long-term investors, I think technical analysis is important for entry points, stuff like that. So, Dan, what are you seeing with Compass Pathways? What are you looking for here?
Sure. And just on that note, I personally, out of all these names, I only have a small MNMD position. It's just a swing trade runner that I'm leaving because it's
Yeah.
not hitting my stop. So that's it for me. But CMPS, I'm watching this downtrend resistance line, and it's just a visual guide. Clearly, we're struggling at this level, these levels, and we keep revisiting them, and we keep failing. And we just did so last week as well. And so what I'm looking for would be, in an ideal scenario, enough of a pullback here. And again, this is the weekly chart, so every candle represents one trading week of action. And keep it simple. We want uptrends, right? We want higher lows and higher highs. We just want progress of that. And so what we need to see here is ideally brief consolidation and then break these levels. We can see there's a lot of rejections in the $10 to $11 range. We topped out at 10.12, 10.92, all the way up to 11.48. So what I do is I say, all right, that's a resistant zone. We are struggling to get through the zone from 10.12 to 11.48. And so when we finally get through that level, we could say this is something different for the first time in over a year, because it's been an entire year of struggling at this zone. So things may be shifting a little bit. There's a few things that I'm looking at. The red and blue line that I have here, these are just exponential moving averages. And I watch for them to cross sometimes. We had a bear cross when we topped out on the big run in August of 2022, and it stayed bearish. And now we're trying to get a bull cross for the first time in almost a year and a half. And so again, that just stands out to me saying, okay, pay a little bit more attention because we may be putting in a bottom. As we know, the broader market put in a bottom at the end of October, and that has been impacting these stocks. There's definitely sentiment correlation where when there's fear in the broader market, the first things they're going to get tossed out are these high risk, high reward names. And so when you start to gain some confidence in the market and we're back up at all-time highs, that's when people are a little bit more loosey-goosey with their money, throwing it around and looking for some profit. So are there any, I'm asking you now, are there any fundamental catalysts for CMPS on the horizon here?
On the horizon, I would say, in the broader space, MDMA therapy, we will find out in February if the FDA decides to grant the therapy priority review. That would, if we get that, that would signal, the regulators are taking this approval process very seriously. MDMA has already been given breakthrough therapy designation, so it seems like the regulators are very open to these new treatments. So I'm looking at February, and actually during this time, it's possible that if the stock is above 993, that investors may exercise their warrants, and that would inject a bunch of cash into Compass. And now that would mean dilution, but that's the name of the game with these pre-revenue biotech companies. Dan, I'd like to ask you a question here about when you decide to start a position in a company. A lot of it seems like more beginner investors or traders are like, oh, I'm buying the dip. But it seems like you're actually looking to start a position when you see the stock price kind of break these resistance levels. So it's not, there's a saying, I'd rather be late to a rally than early to a sell-off. And do you kind of have that same mindset as well?
I like being green right away. I do not bag hold. I learned those lessons. I've been trading for 13 years. And back in my first few years, I learned the lessons that it can always go way lower than I think. And on that note, what you just mentioned, I like you already, mentioning dilution, mentioning share structure, that's essential for these companies. If you're going to be investing, you need to know how to read financial statements and understand what the share structure looks like, what the dilution looks like, convertible debt, where does it convert? That's absolutely useful information, because if you've been following, I started in penny stocks. And so I know that dilution is penny stocks 101, and they will drive those companies into the ground. And so these names, you got to be cautious, because we don't have the environment that has investors throwing cash at these names, because they're extremely high risk. So it's something we absolutely have to be paying attention to. I need a level to play off of. So, I have to have a stop loss, unless you're saying, I'm going to put my money in this company, and you're saying, well, if it goes to zero, that's fine. I'm accounting for it as zero or a home run. That's one way to approach it.
Okay.
But for me, I need momentum. I need follow through, because as we know with cannabis and psychedelics, they can slow bleed for years. And I don't like holding red positions for years. And so I wait for clear levels to play off of. And just using CMPS as an example, we want to hold the back test of these EMAs if we get there, but I want a level where I can say that's either the weekly high or low, or I'm wrong. And I use that level as my stop. So I need a little bit more conviction that it's shaping up, but I'm looking to potentially position for a CMPS entry here before the break of resistance. But again, only if I have a level nearby to play off of. Let's say we pull back to $8 and then get a bounce going. Great. I know exactly how much I'm risking by putting a stop loss under $8. And so I need a more recent support level nearby. The real aggressive bulls, they had a nice move off the all-time low, but I personally am never looking long at all-time lows. As you mentioned, I need some sign that momentum is shifting.
Okay, great. And actually a question about a stop loss quickly. It's not a guarantee. I obviously very likely. Is there ever a time where the stop loss does not get triggered with these? Okay.
It'll be if there's a news, not that it won't trigger, it'll just, if I got a stop loss at $8 and we get bad news and we open at 720, my order will trigger at 720. So there are scenarios where the risk can be greater. And
Okay.
that's something, I'm a day trader by heart. And so I've been working on getting better at swing trading over the last couple of years. And that's the biggest shift for me is if I'm day trading, unless there's a halt or something like that, which is very rare, then I know exactly what my risk is. Whereas with the overnight scenario, news can make your risk more than you anticipated.
Absolutely. Absolutely. So you want to move over to actually MindMed here?
Sure, let's do that.
Great.
So the trade that I'm currently in for MindMed was back here. We had a resistance zone that was very clear where we had rejected from 314, 314, 311. So again, I'm not predicting anything, but I can look at that and say, if we get over 314, the bulls are proving something to us. So I did the same thing where on this little brief pullback, I made an entry. I stuck my stop under 290 there and just said, that's either a quick little bull flag to break 314 or I'm wrong. So I was risking, maybe 5 to 7 cents. And then we get the bull break and we get 70 cents of follow through over resistance in a number of days. So that's a scenario where my potential reward is way more than my risk. And so bigger picture now for MNMD, I'm just watching this monthly time frame. Again, every candle is a month here. So, it takes a long time to shape up, but we're just in a tightening range. We bottomed at 212. We topped at 501. We just bottomed at 240s. And so we're just tightening up, lower highs and higher lows. And I'm looking for this tightening range, which again has been building for a year and 3 months at this point. This will break sometime in 2024. And that's going to give us a clear indication of, I just imagine that the balancing the scale, supply and demand. And we can say that supply has been outweighing demand for years. And now it's balancing. It's getting fairly even. So when we break this sideways range, either demand is going to start exceeding supply and we're going to enter an uptrend, or we're just going to see another leg down to all-time lows with continued supply outweighing demand. So that's one thing that I love about tightening ranges is they give us nice clear levels to go off of. And now we just patiently wait for price to indicate direction.
I guess I could be wrong. Maybe this is what some traders refer to as the stock is coiling up.
You could say that, yeah. I mean, that's what a bull would say in terms of a little bit of hope in there, and it might absolutely it might, but you just got to prepare. It can definitely break bearish as well, so you got to have a game plan for both sides of the scenarios.
And with this MindMed position, do you, when you start a position, is it in one buy? Like, would you potentially even average up into the position if you see it's becoming bullish?
Yep. Generally, it depends. In this instance, it was one buy. I use smaller position sizes on these, very volatile names. If it's something that I have high conviction in, I will build multiple positions. But yes, as you mentioned, I have no problem averaging up, and that's the reverse mindset that people find themselves in, where I'll average down. That means something's not going according to plan. It's dropping more than you thought. Whereas averaging up, great, I'm green. I'm only risking profit that I already have. It's doing what I thought it would. It's affirming. And so, people don't like averaging up, but in reality, it's something that I had to rewire in my brain as a trader, because again, it tells you you're right. And being right is much better than being wrong. And I certainly know that, again, back in my early days, averaging down, holding the bag, making things worse, I've made all those mistakes.
And I really love the way you think about risk management here. It's very cool. Maybe cool is not the right word, but it's great. I guess maybe a last question here with MindMed, and you could add anything else that you're looking for. Do you like to, I know some people like to sell into strength, like when they see that large green candle, they get out. Do you like to sell into strength, or you like to kind of see where things can get, and maybe if there's a certain type of pullback, then you'll get out of a position?
If there's no significant news catalyst, I'm selling into strength. So again, just the fact that, from my entry just under $3, and then less than 1 week later, that position's up 28%. Absolutely, I'm scaling out. And I'm not trying to nail tops and bottoms. So, I sell 20% in the 330s and 20% in the 360s. And just as soon as I start doing that, let's say I'm in at 295, and if I sell half at 335, my break even is now all the way down, close to the bottom. And so that just gives me complete control of the trade and so much more comfort of wiggle room with where a break even would be. And then, maybe I add back if I start to see signs that things are significantly shifting. But I'm of the mindset of, if you are feeling euphoria, that is an automatic signal to take some partial profit, even if it's just 5% of your position.
Yeah. So with MindMed, I see, that big green candle there, a lot of volume coming in. What is that? Does that tell you that might be, institutional money and that's not really retail driving that move there?
I look at it and I just do rough math. Okay, 5 million shares, the midpoint of that range, 340. So we're talking $17 million or so. That can easily still be retail.
Okay.
I'm assuming that's the news day there where we gapped up and had all that volatility. But yeah, start putting up 50 million, then we can start talking about bigger money coming into play. But I mean, to see, we saw Wall Street Bets and Reddit put up, hundreds of millions of dollars in GME in those names. So retail can definitely do 10, $20 million.
Yeah, and especially if this sector gets hot like it did a couple years ago. It was I mean, any little bit of even somewhat good news and the price reaction was something else. All right, let's move on to ATAI here. Also, interesting about ATAI is they own 15.5% of Compass. So I'm wondering if there's how are these two names kind of following each other right now? I know in a previous video you spoke about how Compass was pretty closely following XBI. Do we see that with ATAI right now? If you happen to have XBI up there, if not, it's all good.
Yeah, it's a bit different. XBI, the similarity with Compass is XBI on the weekly time frame. Again, that downtrend resistance line that I had on Compass. If we zoom out here, I can see that XBI had that same thing, but it has since broken bull. So, if I were doing the same thing, I would be drawn right here. And this is where Compass is right here pulling back. XBI got over, and it's still battling this range. Again, I can make that block statement. There's a lot of resistance between 90.89 and 97, but it's very similar. They bottomed at the same time, end of October. It's a very similar chart. As far as ATAI, it's definitely a weaker chart overall.
Okay.
And one way that you can compare individual names, just divide it on TradingView. So CMPS divided by ATAI. And if this chart is in an uptrend, it tells me CMPS is performing better. And if it's in a downtrend, it's telling me that ATAI is performing better. And so if we go to the weekly time frame here, we can see it's balancing out. And what this tells me is, so again, this right here, CMPS is outperforming ATAI. And then the last 2 weeks with the headline recently, ATAI is now outperforming. But look at this range tightening up. This is going to break sometime in Q1 of 2024. And that's going to tell us which of these two names is the better bull in the short term on how this breaks. So that's something to be paying attention to as well. One thing I want to point out on this chart, and this is something I noticed in the cannabis sector as well with MSOS, but look at gap up open. So a gap up open is when you open above the highest price from the previous day. And market makers are doing this to mark tops. So let's go over our last gap ups. Here's a gap up, obviously a big red day. This was a gap up, 2 red days in a row. This was a tiny little gap up, 2 red days in a row. Tiny gap up, 2 red days. I can't find a gap up anytime in the last couple of months that was not for selling. And as a general rule of thumb, gap ups are for selling. As in my trading in the cannabis sector, we used to do that all the time in 2018 Canadian cannabis. We would sell the gap up, we would rebuy the consolidation. So it's just something to pay attention to. Keep an eye on ATAI because, just now four times in the last 2 months, every single time we open above the high of the previous day, it leads to at least 1 or 2 big red days.
Wow, that's actually really interesting to look at here. I know I think ATAI had Yeah, yesterday 3 million volume, 3 million shares traded. Um, I think it's selling off a bit today here. Do you um is it still considered in an uptrend right now? I don't know if we have the current price now.
Yep, this
It's
is current.
okay, great. Sorry. Is it
Yeah, this is an uptrend. So every time you pull back, again, just imagine stair steps. There's your daily higher low at 128, higher high. Here's another higher low at 136, higher high. So 136 is now the most important level to maintain the daily uptrend.
okay?
As far as the volume, again, $3-5 million. We could go in our chat room. We don't do this, but if we wanted to, we could influence the price
Yeah.
of this chart. I mean, so for me, I have a bare minimum. I need $5 million a day for me to even look at something. And so this doesn't meet my criteria personally, because I
Wow.
know a small group can very easily influence price action on a name that has this little volume and little liquidity.
I see. Okay. And speaking of, we're going to get to it later, little volume, little liquidity, GHRS is an interesting one to look at there. It is so there's like nothing going on there at the trading. So I'd be interested to see that after. But let's I guess we'll move on to CYBN here. In your recent analysis, I heard you say that you're expecting volatility pretty soon based on what the charts are, what you're seeing in the charts. Can you maybe go a bit more into that?
Yeah, so just tightening range. So I just talked about the MNMD monthly tightening range over 2 years. This is the same thing, but it's on the daily chart, and it's just over the past couple of weeks. So you get to a point where you just can't get any tighter. And again, the scales of supply and demand are doing this, and they're going to break one way or the other. And
Mm,
so, we top out at 43 cents. We bottom at 378, lower high at 417. And so bulls really want to hold 378 here to continue in this tightening range. And then again, within a week, within 5 trading days, I would be very surprised if we had not made a clear break within those few days from here, and watch for the volume spike. And, the last time I said something similar on this chart was back here, just topped out, little higher low, lower high, you just get real tight. Then you get the volume spike, not huge volume, but enough to break the range. Granted, it didn't follow through a lot, but, that 2-day move up was enough to see the price go, a quick 20% in 2 days. So
yeah.
that's one thing, if you don't like technical analysis, what you can at least do is look at a chart and see it tighten it up to a point that lets you know volatility is coming. I can't look at this chart and say it's going to break bull or bear. I can make a estimated guess, an educated guess based on trends and things like that. But I know that volatility is coming soon. It's going to break one way or the other. And someone might say, well, yeah, no duh. But when you can pinpoint when it's going to happen and that there's going to be a volume spike, it just essentially tells you pay extra attention, and maybe you can capitalize on that quick, fast move when a tightening range does break.
So if you were looking to start a position here and it breaks the range showing it's going bullish, you would also need to see a lot of volume though here, you're saying.
Definitely. If there's
Otherwise,
no
it doesn't. Yeah, sorry. Go on.
no worries. Yeah, volume for me is the prove it indicator. So if the price is doing something, I need the volume to be telling me to believe what's going on. And so if you break the range and it's a low volume day, it's much less trustworthy. And the orange line I have here is the average, the 20 period average volume. So I want to see more than average volume get over that, so and
Okay.
there's ways to in advance, like, I can look and say in the first hour of trading, if we've got 50% of yesterday's volume, I know we're going to have more volume than yesterday. So there's a
Okay.
lot of little observations that we can make regarding anticipating whether the volume is going to be meaningful or not.
And do you happen to use RSI? Do you believe that's a good indicator with your trading style?
Yeah, I love the RSI. The RSI is most useful in significantly trending markets. And I have something called the back burner trade strategy. If you Google chart guys back burner, there's a
Mhm.
whole video about it. It's easily, I've made the most money in my trading career using that strategy. And it's just breakouts, blue sky breakout. You don't want to chase. You buy first oversold conditions on certain time frames. And these certain time frames have relationships with each other, meaning oftentimes hourly oversold will mark a daily higher low in the strongest uptrends. So I look to buy hourly oversold conditions to try and position for a swing trade. I won't go too in depth because it takes me 30 minutes to explain this trade strategy, but I
Yeah.
highly suggest watching that video for some insight into how I use RSI in strong trending markets.
Awesome. And let me just I was gonna ask you something here. Oh yeah, when it comes to, and this is just not specific to here, but when it comes to like certain trading pattern, I guess it would be called a trading pattern, like cup and handle, for example. Is there like like could you look back at charts in history and say that the cup and handle I showed that previously, like I'm just like this is a sign, like do you look at past history of how other stocks have performed when looking at what you're at these charts?
Oh yeah, definitely. I mean, I've got 13 years of a library in my brain of watching how all these different patterns played out.
Okay.
And there are times where I'll be looking at a chart and I'll say this looks really familiar, and then I'll pull up another chart that sometimes is completely different sector, unrelated, and they have very similar patterns, and that's very useful. Patterns and human what it really is human emotions repeat themselves, and that shows up as patterns on these price charts. And so I know what a euphoria climax looks like. I know what maximum fear looks like. And you see these things enough and you start to get comfortable and accustomed to them. And again, the key thing to a trader is you have to rewire your brain to not do what survival of the fittest has trained us to do. We have to look at maximum fear, and when everything in your brain is screaming, get out, that's many times the best time to buy. And when your brain is saying, oh my God, I'm going to have so much money, that's greed. And that means time to take some profit. So it literally is rewiring your brain with what it's programmed to do just through nature.
And what's amazing about it, I guess it's easier said than done. I know you have obviously practiced this a lot, so it's probably come natural to you, but I feel like a lot of people, they'll say, okay, like if it gets to this level, I'll sell. But then when it gets there, the euphoria, it's even though they prepared for it somewhat, the euphoria is still there. And it's like you said, you got to train yourself if you're trading these sectors for sure.
Yeah, big time. It's you see it time and time again. And it's why professionals like myself are able to capitalize, because so many people are going through things for the first time and they don't know what a euphoria climax tops looks like. And that's where people that have done it time and time again are able to position themselves better than perhaps the overly emotional retail herd.
Absolutely. I'd love to. I am really curious to see look at this chart. See what you have to say about GH Research. I mean, they've gotten so. I could explain maybe why the stock's been down. There's been a clinical hold on one of their trials for to submit an IND in the US for one of their programs. That's I think it's caused a lot of fear and a little bit of a sell-off. But what's different about this stock than the other ones is the volume is like non-existent. It's like pretty crazy actually, and I've heard people say that it's because it's very tightly held by institutional investors. Is that BS? No.
I mean, I don't know the specifics, but that's
Okay.
90% BS.
Okay.
I've just been I've been on all the message boards. I've been in the
Yeah.
penny stock forums. Shorts are manipulating it down. This is manipulation. It's what I assume is happening is, again, bad news, as you mentioned. I assume that they're paying their bills through issuing shares in some regard. I mean, you got to keep the lights on. You got to pay the CEO somehow. And if you're in very early stages, especially biotech companies, you got to issue shares to do that. And so I wouldn't go anywhere near this name just because it's all-time lows. It's in a downtrend on every single time frame, and it's at all-time lows. And where people get into trouble is they say, well, this is cheap. Cheap is so subjective. What if they issue, what if their authorized share, their outstanding shares go up another 10% over the next 6 months? 540 can easily become 340. Why not? You have people that bought this name at $20 thinking it was cheap, and here we are at $5. And you just have to anticipate that is a possibility. So again, as you mentioned, the volume is trading less than $1 million a day. Again, that tells me there's no interest here. And to be in a downtrend on every single time frame and to have that low volume, that tells me there's no interest. So There
Yeah.
are so many names in the stock market that are in uptrends on every time frame, strong, people buying dips. And so again, it's the kind of name, if we get a news catalyst for the sector, absolutely, it's going to pop.
Mm.
But in the meantime, just bag holding. Again, I really dislike that sickening feeling in your stomach when you are bag holding and it keeps going lower. And I said to myself, I don't like this feeling. I'm not going to allow myself to feel this anymore. And that's where stop losses come into play, where before I enter any trade, I know my maximum, what I'm going to lose, and I accept that loss before I ever hit buy. And that's the key to psychologically get it at a point where you're able to be, moving money around and trading actively.
Yeah, no, for sure. And I think it's very valuable the information you share about how you view risk management, and you're always planning ahead. Listen, it was great having you on. I think our viewers gonna really enjoy this one. And guys, follow the chart guys on YouTube. They're on X. They have a big following. I really love their analysis. And Dan, I'd like to thank you so much for coming on. Is there anything you'd like to maybe leave us with the psychedelic medicine space in general, with what you're seeing? And if not, it's all good, and we could wrap it up here.
Yeah, I mean, the time will come for this sector. I've said many times, I am very confident that I'm going to make significant money in this sector when it gets, its right catalyst. Again, you got to appeal to the masses. You got to have the headline that gets average Joe who has not thought about buying a psychedelic stock ever saying, wait a minute, maybe there's an opportunity here. And that's when the fun begins. And so might be years. I don't know. We know with cannabis, it takes a very long time for changes to take place in the government and for trials and all these things. But just bide your time, preserve your capital, wait for that opportunity, and learn some technical analysis. We got a free course, and just even the basics, to be just being able to identify an uptrend or a downtrend, even if you're 90% fundamentals. I say, there's the spectrum of all technical, all fundamental. The only wrong place to be on this spectrum is at the complete one end or the other. You got to have a mix to be
Yep.
able to balance it out. Whether it's 90% fundamental, 10 technical, or 90% technical, 10 fundamental, whatever, you have to have the mix.
I see that. I mean, that's very well said, and I completely agree with you. And I think combining both fundamental analysis and technical analysis is, I mean, it's great. So thank you so much for coming on, Dan. And with that, I hope everyone enjoyed this video, and have a great day.
Thanks, Jake. You too.